Well, hello again, traders, and welcome. This is Sanket from Maverick Currencies here, and welcome to this quick update video on the Japanese yen outlook. Again, we had a quite eventful last 24 hours here. We had 4 central bank announcements, and most importantly, we had quite a fireworks out of this Bank of Japan intervention. So we have seen this intervention in the past. So what we'll do in this video is we'll take a look at in the historical charts and see how effective these interventions has been. We covered about this intervention just last week in the last update on the Japanese yen, as we talked about where we got some comments that their Bank of Japan was conducting a rate check. That again kind of indicates that they're looking for intervention. So we were actually kind of looking for the intervention that happened last night. And as you can see, if you look at the shorter term chart, it had quite a move off of that. Percentage wise, if you take a look at the entire move from top to bottom, that was about a 3.68% move. So again, that's a big move, and we had good opportunities here to be on this entire opportunity where it actually broke lower first, had a rally, and then it broke lower again. So this is nice little continuity that we got over here, and then we're just getting another bounce in this most part of the US session today. So the big question really here is, okay, well, what next? We have seen the intervention. How does this change the outlook for the Japanese yen, and what should we expect? So this is where you have to go back in the time to really look at how the previous intervention worked out. I know that for traders that have been trading for the last few years, I mean, this might be something new. But if you've been trading, I mean, since especially going back to 2011, you'll remember that that's when we actually saw the last intervention. So intervention can really come in is when the currency is really strong or it's really weak. If we take a look back, I mean, most of the interventions in the recent history has been to really weaken the yen. So the yen was too strong, and they had to come in and try to weaken the yen. This time around, they had to do the other thing. They have to buy the yen to really strengthen the yen, because yen has been on this this downslide for the last few months, and has been very aggressively moving lower for this most part of this year. So this is again dates back to 1998, when it was the last time they actually bought the yen, so to strengthen the currency. And this is where we can actually just go back in time. So what we can do is we can just take a look at dollar yen and go back in time and see, okay, how did it work out at that time? So there's two key differentiation between these interventions. One is that the Bank of Japan solely acts on its own and does this operation, or it actually can combine or coordinate with other central banks to really stem that weakness or strength. So if you go back in time in 1998, I mean, we had a very similar scenario. I mean, we were seeing a massive run in this Japanese yen. So if you take a look at the run from the bottom to the top, I mean, that's about a 31% return, which is, again, very similar to what we've seen so far, where dollar yen before this drop was sitting at about 24 to 25% run. So we got this intervention last time. As you can see, initial price action was to the downside, and it didn't really stem that weakness immediately after that. Later on, we saw that there were more downside pressure, but immediately the move just didn't have that kind of follow through. So this is where, let's go back in the recent history, especially in this 2011 era, 2010 and 11. I mean, that's when we really saw a lot of these interventions that kind of came in play. So if you look at my chart here, let's go back to, actually we have seen the one in November of 2008, but let's just use 2010 and 11 as an example, because that's when we saw a series of these interventions. So let's take a look at the first intervention that took place September 2010. You can see the initial move. I mean, and this is again the opposite case scenario. The yen was actually really strong. We got the initial move up, but that was not enough to really stem that downslide that we were seeing in the dollar yen. or in the yen itself. So that was, again, not a success story. Now let's go other times, like looking at 2011 March. You can see that at this time, this was a coordinated effort among the all other central banks. This was effective. It did rally right after that. But then after that, if you take a look at the other attempts that was taking place in 2011, August 2011, it did rise, had a massive move up, but then totally faded that move. We had another move up in November, went up and totally faded that move. So as we look back in this recent history, there's more case scenarios where the fading that whole Bank of Japan move or the intervention move was a better call. It did not have that immediate effect on the currency to actually sustain that move there. So if you take a look at the movement today, we've already kind of made that retracement halfway through. If we just run some Fibonacci lines on this, we can actually see how far we are from top to the bottom. If you just take a look at the top to the bottom move over here, so we're probably be sitting right here at about a 0.328 the retracement level. So the further it gets up, especially if it tries to get above that 50%, again, maybe that's when we probably see that move. That's a much deeper rally that we want to see, especially if you're looking for a continuation. So look, at this point, I think it's still early to call, because at this point, it's still pretty unclear if this was a one-off event, or they will be coming in and trying to weaken the currency or try to strengthen the currency again. So this is, again, a dollar-yen pair, but if you take a look at our yen basket, which, again, all the yen major crosses there, you can see that there's a nice little move on the daily chart. You can see quite a big little upwake on the candle here. So is this going to have a lasting event? We have to wait and see if there's more events or more opportunities to really come in. There's one thing for sure, is that the Bank of Japan is really eyeing on this 145 area, because last night Bank of Japan had its meeting and they did not raise the rates, but you can see we can see that the 145 area has been acting as a nice resistance. And last night, when they did not make any change in their monetary policy, they actually, the dollar yen started to run up. And as it hit that 145 to 146 area, it immediately got, that's really where the intervention took place. So I think what we really need to take a note of is 146 or 145 to 146 area as a key level where we could see further attempts coming in as well. So we're kind of far away from that. It's sitting at 142. We're still about 300 pips away from that level. But I think if this is where we could see the Bank of Japan maybe drawing a bit more line in the sand there and say, well, if it gets above this, we'll kind of come in and act again. So at this point, like I said, let's not get ahead of ourselves. This is just a one-day move. It doesn't warrant a follow-through, as we have seen in the past in the last intervention attempts. So I think what we need to see is just to see how this play out. If this is a bear rally, then we need to kind of look for a failure for the bear rally to kind of short into. If this start to make a full recovery, then that's where this might be. This might not be a good indication, especially if you're looking for a follow through. So right now, not really getting a whole lot of follow through from it. But again, today this is also the U.S. session. But when we go in the Asian session again, that's something we'll pay attention to as well. So I think you just have to use some caution with this move. Fading a move, be sure. I think we can fade that move, but just make sure we have some tight stops in between, because we need to be wary of if there's going to be any more hints or attempts for further interventions. So that's the outlook here. A lot of the yen crosses, again, massive move. If you take a look at Swiss franc yen, this pair has almost had from top to bottom almost a 700 but 6,700 pip move. I mean, massive moves across the board. So market needs to digest this and then see which way it goes. Meanwhile, I think there will be other currencies that will be in play, but definitely seeing a lot of volatility. So if you're trading the yen crosses, expect some volatility, and that would allow you to have some appropriate stops, not using very tight stops. Make sure that you're using appropriate stops so you're not really getting overrun by the volatility. Thanks for joining. We'll see you guys in the next update. Cheers.